Now for Global Business Updates, Rotus Oddiri joins us. Good morning, Rotus.
Good morning, Dr. Batty. Good morning, Rufai. Good morning, Ayo. Good morning to all our viewers out there. Beginning with Tesla, the earnings were as bad as was expected. So Tesla's total revenue fell 9%, about 21.3 or so billion dollars. If you look at its automotive revenue, which makes up about 82%, 83% of the total revenue, Tesla has revenue divisions. It's mostly, of course, selling of cars, but they're also an energy company. They do energy storage, and they have some other services that they provide. But the bulk of course, is the automotive revenue. That fell about 13% in the first quarter of 2024. And then you look at their free cash flow. Free cash flow was negative to the tune of over $2 billion. This period last year, they had about $400 million cash positive of free cash flow. And I think in the fourth quarter of 2023, I think it even reached up to about 1.5 or maybe even 2 billion. They attributed that to a high level of inventory buildup. You know that they've also had a lot of price cuts for their cars. So cash flow was severely impacted. And then if you look at their net income, about 1.1 billion, it dropped by 55%. So it was pretty ugly. However, the stock rose in after hours trading, I think about 13%. Now they're still down about 38, 39% for the year. And that was because of the highlights of the earnings call that the company had. So if you look at the highlights, is Elon Musk again making promises that he's been making for the past number of years. They said they're going to ramp up new models. We don't really know when those new models are. They had I think it was a Model 3 performance model that they relaunched yesterday, but that's not really new, right? They also said, Elon Musk talked about, he made an offhand comment of a quote, cybercab. The cybercab is apparently the robo-taxi, which they want to use for ride-hailing, driverless. But that robo-taxi, I mean, he's promising it for a while. There are regulatory hurdles that they're going to have to clear for that to happen. Waymo, Google, other companies that have been testing their own autonomous driving, they essentially have been under the purview of regulators. And then there's an issue of whether Tesla will take full liability if there are any accidents. So that is still to be determined. Then they also talked about, there's a couple acronyms there, FSD and OEMs, basically getting FSD contracts with OEMs. FSD is full service driving. OEM is original equipment manufacturers. They said they want to essentially outsource their FSD software, full serve driving software, to other entities out there in order to drive up revenues. Again, there's been some controversy over full service driving. Tesla bulls will upload pictures on Twitter. I think I've even posted one of those videos on the show where the car is driving itself, but there's still the issue of safety. And so, you know, those are the type of things that he talked about on the earnings call, and it gave you know, Tesla bulls reason to be optimistic. But if you take the fundamentals in terms of the numbers, things aren't looking too good. We move to Spotify on the streaming side. Spotify posted some healthy earnings, about 3.6 billion euros worth of revenue, up about 20%. Their monthly active users didn't quite meet their forecast. They did about 615 million. They forecast 618 million. Spotify said it was because of the price of the cost cuts that they've embarked on. They've had layoffs, they've tried to trim down the fat, and that kind of impacted the ability to advertise to get more active users on their platform. They still added 3 million extra users. I think the total users now are about 239 million, 14% year-on-year growth for the company. And if you look at Spotify's stock, now Spotify is a Swedish company, but they are trading on the New York Stock Exchange. They've skipped an IPO and did a direct listing. They have what's called ADRs, which are American Depository Receipts. American Depository Receipts basically give Americans security options to trade on a company, a foreign company, and so that's essentially what they are. So those ADRs, basically Spotify stock up about 61% year to date. The stock climbed about 11 or 12% yesterday. So even with the price increases that they've announced, basically for their services, Spotify is still doing pretty well. In fact, that was the highest quarterly revenue for the country. I think about 196 million euros. They there was a loss in the same quarter of last year of about 225 million euros. So Spotify bounced back, biggest quarterly profit ever. The stock responded. Things seem to be going well for the company. I think you might have mentioned the Congress passing that foreign aid bill of $95 billion yesterday. In fact, the early hours of this morning when it was passed in the Senate. Now remember, we've been talking about this TikTok thing like for a while now. After the House of Representatives passed the bill, it's been languishing in the Senate for a while. The Senate has not committed to pass it. So what they did, they passed another bill. This is the House of Reps, and they included the TikTok divest or ban, if you want to call it that, divest or ban bill into the foreign aid legislation. So they basically forced the Senate to have to vote on it as part of that aid package of 95 billion, 60 billion of which is going to go to Ukraine, also Taiwan, and also Israel. So essentially, they've made some modifications now. ByteDance has 270, in fact, I think it passed 78 to 18 or so. It was a big margin. Democrats and Republicans both supported it. ByteDance now has, that's the parent company of TikTok, 270 days to divest and sell it off. That's about 9 months. Initially, it was 180 days, about 6 months. President Biden, who says he will sign the bill once it comes on his desk, has the option of giving them an extra year in order to do so. It is expected that there will be legal challenges. TikTok or ByteDance have already spent about $7 million or so lobbying. So this is still got a way to go. And by the way, between this time, you can still use TikTok in the United States. Let's get to Apple. Apple, like Tesla, they've also been struggling a bit. There's a tweet from Tim Cook saying, pencil us in May 7th. And I want you to take a look at this really cool animation of the Apple logo. Basically, it is expected that Apple will be revamping their iPads, basically, iPad designs and iPad inventory for customers. iPads only accounts for about what, 4-5% of Apple's total revenue. The iPhone is still the main draw. So essentially, that whole pencil thing is a clue to a new set of iPads, which you have a stencil, a pencil basically that you can use to make designs for creative. Apple is facing a lot of issues now. They're getting desperate. They still have their worldwide developers conference in June. They're putting a lot of pressure on their designers for the iPhone 16, which will be due about September, October this year. They need something new. There was a report yesterday from Counterpoint Research saying that Apple's iPhone sales in China fell almost 20% in the first quarter of this year. As we've talked about, the Chinese have said you can't use an iPhone if you work in government. Huawei has been stepping up their competition. So they're really looking for something new. We'll see what happens on May 7th, but they haven't given any clues. But what the market is saying is that it's going to be the new iPads that they will be releasing. And then I think we get to Africa now. The South Africa Reserve Bank releasing its April monetary policy review, which was just yesterday. The South African Reserve Bank, as you know, there's an election coming up this year. The benchmark rate has been at 8.25% now for a while. Borrowing costs surging about 475 basis points to try and tamp down on inflation. Inflation continues to be sticky in South Africa. It did ease to about 5.3%, but the target range for the Reserve Bank is between 3.6 to about 4.5 or so. So it's still on the high side of, 3.6 to about 6%, I believe. It's still on the high side of the range for the Reserve Bank of South Africa. So what does that mean? It basically means that borrowing costs are still going to remain high. There's been pressure on the Reserve Bank and Mr. Heseta Hanyego, who's been reappointed, to reduce borrowing costs because of what it means for the elections and so on and so forth. But they've stayed the course and said that they still expect inflation to average about 5.1% this year, maybe coming down next year. And then finally in Nigeria, I think I already mentioned this in the headlines, the new fiscal incentives that the Nigerian government is looking to revamp the oil and gas sector, hoping to get, $10 billion in investments. It's going to be tough in terms of where things are for oil and gas. Companies looking offshore, the whole climate change narrative, renewables, and so on and so forth. That's our update for today.
Well, thank you so much, Rotus. We're out of time now. Would have loved to take the stories further, but hopefully you can discuss in detail during Global Business Report at 11.